Hello everyone, welcome back. And we have just hit our biggest milestone yet, our 100th episode. Thank you to all the fans for all the support that you've given us so far. And so if you haven't watched the 100th episode yet, please go and watch it. And today is episode 101. My name is Yu Hong and I'll be your host for today. Today in our studio, we have Nicholes Lee, a senior financial consultant. So let's get to the questions.
Hi.
Yep.
Thank you for having me here.
Right, let's get to the questions, yeah? Okay, so Nicholes, what is the meaning of FIRE?
Have you heard of something like financial independent and retire early? So this is the meaning of FIRE. So basically, I heard about it quite early. That's why I actually become a financial advisor. Because I believe actually in order to have freedom, or retire early, you need to be financial independent.
Nicholes, how do you help your clients overcome that fear of anxiety or maybe confusion when they just started their financial planning journey?
Just explain in a layman term, simple process. Actually guide them. The mostly is you need to support them because they are new to this financial planning. This is most important.
So Nicholes, what is one common misconception about financial planning that you wish more Singaporeans understood?
Financial planning is not all about insurance. Actually, is the overall portfolio that actually reduce your risk and make a certainty toward your life goal.
How do you balance between giving the actual advice as well as having a personal connection with your clients?
First of all, put my client first, okay? Be transparent to them. So basically, also educate them in terms of the financial terms and why you actually need this for your retirements, for example.
Why do you think some Singaporeans hesitate to purchase insurance, and how do you address these concerns for them?
First of all, because most of them think that insurance is a waste of money if they didn't use it. So, for example, they purchase a CI. They will think that it's waste of money if they don't use it. This is a biggest misconception.
Right.
So how to overcome for my clients is I will actually advise them to take a small step. So start with a smaller one if they have budget constraint. Because I would say the most vulnerable client or customer is those medium and low income one because they cannot afford to actually have an crisis happen.
So Nicholes, how do you approach creating a financial plan that's unique for your clients when it comes to like maybe starting a family and at the same time also wanting to buy a house?
Normally, I will advise based on percentage. So I try to actually put a portions of a percentage toward financial goal, portions toward like starting a families, and portions toward purchasing any flat or condos. Yeah, basically you need to actually have a proper segregations or proper portions to actually achieve it. Because I do not advise put everything into one things and give up another things.
What's the difference between just buying insurance and also having a comprehensive financial strategy?
Definitely. Because if just buying insurance policies, basically you can just buy any coverage amount. But how much coverage actually do you really need? How many times of your salary you actually need to be covered? If you have a housing loan, how much do you need to cover? If just buying an insurance policy, you do need to think about it. You could be over cover, okay, and then you will sacrifice in terms of others portions like retirements, educations for your kids, all those. So I think a more comprehensive financial planning is better compared to just buying a policies.
For someone who is nervous about meeting a financial advisor for the first time, what can they expect from the first experience with you?
Basically, the misconception of meeting advisor is advisor always try to sell you something. A proper advisor should actually look at the overall portfolio, actually to guide you which part of your financial planning, there is a loophole or under coverage, okay, or will be easier for you to achieve your financial goal earlier.
So how do you rebuild trust with people who have a negative experience from the past with a financial advisor or insurance agent?
First of all, I think we must understand what is the past experience that client actually face, and then we actually try to address the concern of the customer. Okay, we can also actually educate them, give them the control. Okay, not about telling them you should do this, you should do that. Tell them, educate them why doing this will be actually benefit to them.
So is life insurance a must-have for everyone, or is there a case where it's not necessary?
Most of them need a life insurance.
Okay.
So basically, for example, you have debt, okay? You have a business. So business, you might one day want to buy out your shareholders, okay? When you want to pass on your legacy, so basically you need a life insurance. When do you need a life insurance? You are wealthy enough to actually pay off everything without life insurance. Then you do need it.
So should someone focus on insurance first or investments first, or can they tackle both at the same time?
I would say tackle both at the same time. So we allocate proportions in both. So we tackle it at the same time, because the power of compounding if you actually invest. So actually, as if you can able to calculate, right, investment returns, right, able to actually pay off your insurance at a certain years. So basically, you use your investment to pay off your insurance coverage.
What's the benefit of diversifying your investments across different assets versus putting all your money in one place?
Because based on history, right, no single asset, right, can be dominant in terms of the returns for years. Okay, so basically by diversifying your asset classes, you diversifying your risk itself. So for example, if you have a rental income, so basically your rental income actually can support your daily lifestyle. If you have a stock, you invest in stock with dividends or without dividends. If macroeconomy is good, right, stock should actually perform better. So basically, with diversifications of asset classes, you don't need to be worried about short-term pullback. This is the benefit of diversifications.
So can you explain what dollar cost averaging is in a way that a beginner investor can understand?
So basically, it's a strategy where you actually invest a fixed amount of money regularly instead of actually timing the market, because timing the market is one of the hardest way to actually invest. The reason why is you cannot control the market. By dollar cost averaging, right, you actually can get the average cost of the investment. Instead of you try to time it when it's low, when it's high, you actually don't dare to go in and it go higher.
Why is it so important to stay focused on your long-term goals when it comes to investing, especially during market volatility?
So basically, because in short terms, right, you cannot actually time the market. But if you invest in the longer term, right, you let the risk to be ease off. So example, if the reason will be the tariff and war itself. As you can see, short terms market will be react based on this type of bad news. But in the longer terms, right, actually you can see the market will recover. By investing in the longer term, you actually reduce a lot of risks over the market volatility.
So if someone is just starting out, what's one simple step that they can do to kickstart their investment journey?
Start with a comfortable amount, a smaller amount, and understand what they actually invest in. Actually, do not follow what the social media or actually what people say about the investment. Because you might not understand the investment itself.
Can you explain what is CareShield Life and why does it matter for Singaporeans in terms of planning for their future?
First of all, Singapore is an aging population. So this CareShield Life, right, provide an income when there is a disabilities happen. So basically, this can actually address rising long-term care costs, and also actually can reduce your family members' burdens, because you can use the money to actually hire a maid to take care of you when you are old age with disabilities.
And what's a simple rule or concept, like the rule of 72, that you wish everyone knows about?
Pay yourself first. Put a portions of your salary. Pay yourself first instead of actually paying the bills. What I see is a lot of them actually, when salary is in, they try to actually pay all the bills first. Whatever actually left in the bank account, then is their savings. But the correct way should be pay yourself first, invest the money, let it compound, okay? So you pay your bill later on, reduce your expenses. This is the most important things when you are starting work.
And how can young families in Singapore balance saving for their children's education as well as planning for their own retirement?
This actually has been a very hot topic. Have you heard of the sandwich generations?
Yes.
Yeah, so basically, you're in between your parents and your kids. So I would say start at a portions that you are comfortable in and start early. As if your kids is only few years old, you should start save for their educations. So because the rules of compounding, you can't actually compound the amount of money if it's actually in a short period of time. You can use the rules of 72s to calculate how much money you can actually double in years based on percentage.
Why do you think retirement planning is often overlooked, and how can we make it less daunting for people?
So basically, for all of the Singaporean and PR, right? Actually, most of them think that the government has implement a very good retirement scheme called CPF Life for them. So they think it's enough for them to actually rely on this CPF Life for retirement. Second is that because of knowledge,
Right.
Without a proper knowledge, it's a bit difficult for them to actually go into retirement planning.
Okay.
What to invest, where to place their funds. Yeah, that's why most of them actually try to actually place into a fixed deposit. I will actually guide them through, actually educate them is most important, because with a proper knowledge, right, they should be able to understand what they actually invest in and how it actually benefit them toward the retirements.
What's one money-related topic that most Singaporeans don't talk about enough, and why should we start talking about that?
In my opinion, how much is really enough for your retirement? Because this will be actually create a financial stress and mental stress if you do not know you're unknown about the certainty in future.
So how do you measure financial success for yourself and your clients beyond just numbers in the bank account?
In my opinion, a financial success is freedom. Okay. So basically, you can do what you want. Okay, without actually stress about your finances. You have a choice.
Okay. What's the most impactful piece of financial advice that you've ever received, and how has it shaped your approach towards financial planning?
I still remember during my uni life, I read a book. They asked to actually build your assets, build your cash flow, and do not rely on solely one income. It shaped my approach from building multi-source of income, actually to sustain my lifestyle, include my client lifestyle.
What sets you apart from other financial advisors, and how does that affect your advice towards the clients that come to you?
Basically, I try to educate my clients. I handhold them, and one of the most unique part is my client always tell me, you don't need to sleep. Because I always sleep around 1.
Wow.
Yeah, so my clients sometimes text me around 2:30. Yeah, so my client always say, you don't need to sleep. I will try to actually reply them as soon as possible.
Walk us through what a holistic financial planning process looks like. How do you turn someone's goals into a plan?
So basically have a proper structure. So in order to achieve your goal, right, you need to have a proper structure. Example, you need to achieve 500,000 to 1 million in 20 years time. So basically you need to have a very disciplined structure. You cannot say today I don't want, because this is a long-term goal. It's not a short term. And you can't achieve this in a very, very short term. So I will break down to them what should they do. And with a proper structure, we should able to achieve this in a certain year.
What are the must-have insurance policies every Singaporean should consider to protect their financial future?
I think first of all is term.
Okay.
Second is actually critical illness. So third will be also hospitalization. It's actually very important because you are passing on risks, right, to the insurance company.
The financial advisory industry can be very tough. How do you stay motivated to continue helping your clients despite all the challenges that you face?
When your client, right, mention to you certain things like, thank you for helping me actually to achieve this financial goal. And when actually my client tell me, without the planning, right, I should be more stressful. So basically, this actually motivate me a lot.
What are 3 compelling reasons why someone in their 20s or 30s should start investing now rather than later?
First of all is the compounding effect. So the early you start, the better it is.
Okay.
So basically, I started my investment journey at my 20.
Right.
Okay. Secondly is because as you grow older, right, you have more commitment. You have family, you have a house. Yeah, so start early is better. Third is because when you are early, you afford to take risks. When you are 50, I think you will tell me that I don't want to take so much risk. You get what I mean?
Yes.
The risk appetite actually change as you go older.
For average Singaporeans, how much should they actually save so that they can have a comfortable retirement? And what affects this number?
We are talking about whether excluding CPF or without, with CPF or without CPF. This is the questions. I think at this moment, if you want to live comfortably during retirement, without CPF, we should need to around 1 million. Yes. So basically, if you have 1 million and you're able to achieve 5% income,
Right.
yeah, per year you will actually get 50,000. So if you have CPF itself, so you get around 1,000 plus. Okay, 1,000 plus. So basically, you're quite comfortable with 6,000 to 7,000 a month. So basically, you can actually travel, you can actually do what you want.
So in today's financial advisory landscape, how do you ensure that you are competitive in this industry?
You need to keep updating yourself. If not, you will get left behind. With those, a lot of things like AI coming up, all those, right? But I believe human touch is still very important. But with human touch itself is not enough. So basically, you need to keep yourself updated.
What makes a good financial advisor in Singapore?
Responsibilities. Take it very seriously because people trust you with their money. So basically, I think responsibility is very important, and be more professional so that the money you handle, right, the client actually have a trust and 100% on you.
Okay, so that's all we have for episode 101. Stay tuned for episode 102.